Hello guys, welcome back to another daily market review. Today is June 16th, and today we had a large sell-off and then retracement. So it delivered two legs and reversed basically. And here's how it looks like when I zoom out. So initially, buy side was taken premium. It went for the 830 low right there, kept going lower. It set a low there, and it established the dealing range basically for the afternoon session. And the whole 11 o'clock was just a pullback into premium, fair value gap there, and it sold off from there and completed the one set up for life. Second leg objective was completed. After that was completed, as you can see, it got into consolidation. It was not, Nasdaq was not willing to go lower, and basically formed a reversal and rallied, completed the buy model right here. At the end of the day, it completed, tagged the buy side right before market close. But here how I see this: sell side of the curve, buy side of the curve. This is the completion. Now afterwards, after here, it could consolidate and then rally, or it could consolidate and keep going lower. I don't know what's gonna happen. We will see. But let's dive into the lower time. Let me just zoom in a little bit so we can see what happened intraday. So here at market open, we had these highs here, which is I think SMT if I'm not mistaken. Where is it? 1 second, let me find the high. I don't want to bullshit. I think it was SMT though. Yep. So as you can see, ES is higher high there. Nasdaq is higher low. Yeah, lower high. So that's the target, buy side target. All these highs are targets. So let's annotate that. That's the buy side. So at open, as you guys can see, 830 left a huge wick, and price never came down even the 50% of it before the rally. Okay, and it did not take out the sell side, which means the more it goes to the upside, the more it will be drawn into at least the CE of this wick, because it rarely leaves wicks like this, especially if it's red folder news delivery. So for me, if I saw this buy side delivery after maybe like the CE of the wick or maybe sell side, I would have been in. I would have wanna be a part of that move, but in this case, because it didn't do that, I also the 930 I don't trade it. I didn't want to be a part of it. So here how I read this though: market formed smart money reversal, SMT divergence at the lows, which is indicated in buy model, rallied. There's an order block here, or breaker block, whichever you want to use. You can use either or. This is the OB. I think I'm using the OB here because it's more obvious. And basically just chopped at 930 and rallied. At this rally, it was unwilling to go higher. How do we understand that it's unwilling? If you look at the down close candles here, once that down close candle is violated with energy, so there is a displacement there, you can say the market is not willing to go any higher than that. So it set a high right there and displaced. Basically this is a trap, sold off, retraced back. That's not discount, or I'm sorry, that's not premium, but this is a V-shaped reversal or V-shaped rejection. And after the V-shape, as I always say, you wait for the first SMT divergence to short if you like to trade before 10 o'clock. This is the SMT divergence if I'm not mistaken, or here, sorry. Oh, there's no SMT here, I think. Maybe on a lower time frame, because ES is making higher high here, or equal highs, and has like a failing. I would say this is a lower time frame, maybe like on 30 second it'll be a swing high Let's see. Right here, but I mean, you don't have to go down to 30 seconds to see that, because as you can see, ES is making equal highs. Nasdaq is not even close. I think it's failing at the mean threshold of this up close candle more so. Yep, failed there. This place lower. The first fair value gap, also IFED above an up close candle, which indicates strength. This is the silver bullet time, 10 o'clock news. 10 o'clock open manipulation into fair value gap, closed weak, and basically delivered sell side afterwards. So here, the IFED above that up close candle and a weak close, that indicates weakness, and that's why the move was very, very, very energetic. Here, I mean, the execution could be two ways. You can either trust that fair value gap, put stop loss above it, and or if you can't anticipate or don't know whether it's going to be an IFED or not, you can fill this OB. So the next candle, once this closes, you can fill that as well if you wish. I didn't take it because it was already below sell side. So, I mean, to me, that was not worth to take the shot for the day. But it sold off, it panned out. And there is a consolidation here. Now we have established a new dealing range because the sell side is taken and the low is set. The consolidation is here. So here, from the high to the low, we have these fair value gaps, basically premium fair value gaps. Premium fair value gaps. Anything below that, you should be disregarding. Okay, so here in this case, it traded all the way up to this one, and sold off. Now, why did it go all the way up to that one though? There is a reason. It could have just panned out like sell from the sell model here. It didn't, because there is no manipulation about this candle. So it has to go up there to basically deliver both sell sides and both buy side and sell side. So you need to see that balanced range. Both sides are delivered there. Now it's balanced, sold off, displacement, basically formed a trap also here. This is the fair value gap after that V shape. Now this is another V shape. Again, you can wait if you want more precise entry. You can wait another SMT, or the very first SMT after V shape rejection, and this should be an SMT if I'm not mistaken. Let's see. Yep. So ES made equal highs, Nasdaq made a lower high, and basically sold off there. Tagged the wick CE, didn't deliver the sell side, but afterwards it went for the sell side here, which is basically one setup for life or second leg objective, OSFL or second leg objective. And here in this delivery, in the pullback, you can also trade the pullback if you wish. This is so here I'll zoom out a little bit. Sell off, pullback, sell off. This is a higher time frame a narrative. Okay, this is not a 1 minute narrative. Okay, because you're targeting this low, and that is not a 1 minute sell side. The 1 minute sell side is this one. Okay, so if you wish to trade the 1 minute market maker sell model, this is your framework. Okay, from 1 minute sell side to 1 minute buy side, this is your dealing range. Anytime it goes above the premium fair value gap or from the bearish SMT, you take that and close it at the 1 minute sell side. So here in this case, it is a higher time frame, maybe like 5 minute, 15 minute time frame sell model. Okay, we're just looking at it on the 1 minute if it makes sense. So in the pullback, market also formed a buy model, which is a 1 minute buy model, I would say, which is a higher time frame pullback, right? I mean, at the time, obviously we don't know this, but you know, that's why we do hindsight analysis to learn the characteristic of the markets, right? So here, there is, I think it was here, I don't remember exactly, so I'm looking at it as I go. I didn't watch the market today, honestly. It was not worth my time. Here we have 3 drives on the 1 minute into range EQ from sell side to buy side. Range EQ, so immediate reaction from the range EQ. Now it formed an OB. This candle, you can long it if you wish and trust the OB low, breakaway gap, and delivered buy side, basically the 10 a.m. high. If you collapse it, because you technically don't know whether it's going for the buy side or not, but in hindsight it ended up being pullback. So whenever you target a fair value gap, that's essentially a pullback. If you're targeting liquidity, that's expansion. You're on site with the market. Okay, so anyways, let's not make it more confusing. Premium sold off, sell side delivery. In this case, let's read the order flow though. V-shaped reversal. This is the first fair value gap. You can short that if you want to. If not, you can wait for the bullish SMT, bearish SMT, which is here, sold off, and you just basically keep your position on afterwards. So here, this shouldn't concern you because this is just a deep pullback. Why deep pullback? Because first of all, it's engineered liquidity. It needs to deliver premium or buy side. So here, that's what it's doing. It's going for the buy side. Okay, the short-term buy side. And deep pullback. What is a deep pullback? Previous dealing range EQ, which is this one. Right there. Let me make that red. Goes for the deep discount, or I'm sorry, deep premium, and sells off from there on. And I believe it's formed. Yeah, it formed a divergence there as well. So that's a confirmation. Whenever you guys have, or we have a deep pullback, that requires another confirmation, guys. Okay, if you were not in here and holding your position open, and if you want to short afterwards, like here after the deep pullback, that requires a new confirmation. You can't just short it right away. So here's the confirmation. The SMT divergence one more time. It sells off, delivers the sell side. Then here it basically consolidated a little bit. It was stuck in between order blocks, formed a bullish SMT here, from the bullish SMT there, displaced, then it came down one more time from the OB, which is normal, which is, you know, which could happen. I mean, after, so this leg is, you know, from the high to low to other than 20 points. You can't expect like a V-shaped reversal unless it's like the last hour or last 10 minutes of the market, you know. So it came down all the way to the wicks, this wicks CE, I would say. Basically further manipulation and rallied from there. I gotta clean the chart a little bit. When it's too much, when I see too many paintings on the chart, it just bugs me a little bit. Now we are in a buy model as the divergence is there. This is the high it's set. I'm not sure if it SMT there. No, it did not SMT there. So here, that could have also ended up being a reversal or a pullback. Came all the way up to the premium fair value gap, respected all the way, and then it came down, dropped lower and lower and lower, came all the way to the extreme fair value, extreme of the PDRA, also the range EQ, and send it higher, touch down into the range EQ one more time, and went for the buy side. So the buy side is, you have these highs, this one and this one. If it expands more, you're looking at this one right there, and that's what happened through the market close. Clean order flow, heavy price action. Also, this pullback here, this is a 3 drive as well. I think it could be 5 minutes. I'll check it out in a second. Here's a divergence one more time. So it diverged here. Thus it delivered sell side one more time, and here it diverged again on a higher time frame perspective. It looks like a 5 minute 3 drives though. Let me see. Yeah, here first low rated, second low rated, and the third one rallied, and the bodies are telling you the story. It rallied here, IFUD below down close candle, so you can the candle afterwards you can anticipate an expansion, which is what happened. It retraced down into the CE, the mean threshold of this OB, and rallied. So yeah. And we had a stronger close. The daily did not close as an up close candle, which is what I wanted to see technically, but it's what it is. I'm thinking. I'm still thinking the same thing, honestly. I haven't changed my bias. I think tomorrow we could see another down close candle, but what I'm primarily looking at is the bodies. I want to see how Wednesday's daily candle closes. The body closes. That's primarily what I'm looking at, because I think this is gonna end up being an order block on a lower time frame scale. So one down close, second down close, maybe the third one, I don't know, but the low I think could be set, or maybe it could get down into the rejection block. So basically can do something like, let me see, is it the forecast? I don't remember. Bars pattern? Is it the bars pattern? Yeah. I forgot how to use this tool. Hold on guys, I'll flip it. Okay. So basically we can technically see something like this tomorrow, Thursday. Rejection block can come down into, oh my god, I'm bad at drawing this. Can come down into the rejection block and rally from there on, or we'll see what happens. The low from today could also end up being a swing low after Wednesday's close, but regardless, do not trade tomorrow. No news, and we are range bound right now. Save your capital. Come back on Thursday and Friday. On that note, tomorrow there will be no live streams. Again, stay safe. I think this low will be a swing low. If it becomes a swing low, I think we're gonna have a great Thursday and Friday trading session. If not, I think we could have a great Friday session instead. But anyways, I hope you guys find this insightful. I'll talk to you later.